cloudy, maybe a few showers, breezy and cool. It'll be in the 60s. Lots of sunshine, still cool and dry weather on Thursday. We will be warming things up by the weekend. On the Money Matters Radio Network, I'm Mark Rosenthal.
Ever wonder why you have insurance for your car or home, but not your digital life? Meet WebRoot Total Protection, your digital bodyguard that includes antivirus, identity protection, VPN, cloud backup, and more. With plans for individuals and families, WebRoot takes the guessing game out of cybersecurity so you can get back to living your best life online. Go to webroot.com/radio and get 50% off today. That's webroot.com/radio to get 50% off today. Live a better digital life with WebRoot, because peace of mind shouldn't be optional.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here, and as we kick things off, we got some housing-related information to share with you today. Starting with, before most people woke up this morning, Home Depot reported earnings. They came in, and interestingly, they did miss on both revenue and earnings. The first time since 2014 that they have had a miss on both top and bottom line in the same quarter. Despite that, you get headlines like this one from Bloomberg. Home Depot sales gain with shoppers opting for smaller projects. And when we look at Home Depot stock today, they are responding positively at this point, up 4.25%. What's going on with the Depot of the Homes, Paul?
I'm a little surprised, Chuck, to see the increase on Home Depot stock today, because you read through a lot of this earnings feedback, and none of it I would really point to as being something that is really accretive to the stock. And if you look at the state of the housing market, which we'll get into, and we've talked about it in prior shows, it's not in a very good place. And Home Depot has been in this cycle the last couple years where many of its consumers have sort of pushed back these larger projects on their home. The CFO was quoted as saying that this home deferral has really lingered since 2023. So I'm a bit puzzled as to why the stock's going up. I mean, we can get into the nitty gritty of the earnings report, but am I missing something that you've peeled out of here?
The only thing that I saw is during the quarter on a per month basis, like they even broke this down further, and basically they saw steady increases in spending over the course of the quarter. And so I guess the good news could be, hey, look, you've had a couple months of upwardly trending same-store sales now within the quarter. If you expect that to continue, it gives you a path towards further improvement in the second half of the year. And I think that could be the read-through when you look at this. It is tough to just look at housing as a whole and say, hey, there's any meaning, there's no meaningful growth impulse in housing right now.
Right.
And so the question and kind of what you're betting on with Home Depot is, combination of, hey, there's going to be, more renovations that happen, and there are going to be not even renovations, just more of like the smaller projects. Hey, I've got, a pantry that I want to put new shelving in. Great, all in between the shelving and maybe some new drywall and paint that I got to do in order to make it all, how I want. Okay, I'm going to be, in for $700, and I've got to, and hey, more homeowners are going to do that kind of stuff. So I don't think this is like a bad, report. Again, comp sales up 1% in this environment is pretty darn good. I mean, here's the other thing that's always true about Home Depot. Even in a tough environment like they've been in for kind of the last 2 years now. I mean, since, early 23, it's been pretty tough in housing. They're great operators. I mean, this is a company where you can look at a quarter that's kind of meh and still say, hey, they rang everything they could out of that quarter because the economic fundamentals are just not particularly good for Home Depot. But they still figured out how to make it work for them, and I think that at least reaffirms that management still knows how to make, chicken salad out of chicken bleep.
Yeah, no, it's interesting the strategic shift that they've had. They've really made a huge focus on targeting the pro contractors out there. If you look at them compared to Lowe's services about 70% of its customers are kind of the DIY, the do-it-yourselfers, whereas Home Depot now is saying, their CFO, that 55% of Home Depot's sales are to professionals out there, and they've furthered this by acquiring SRS Distributions for $18 billion last year, which is a supplier of roofing and landscaping and pool professional equipment. And then they also grabbed another company out there that has specialty building products. So to your point, the resiliency that they have in a really tough environment for home sales is impressive. This comparable sales growth that we note here, only in 2 of the last 11 quarters have they been able to report sales growth. So it's been a tough environment, and it does seem like the positioning that they've had on the pro side of things leads them to at least be positioned well, Chuck, if for some reason we are to get a turnaround in the housing market, whether that comes from lower interest rates or just perhaps people finally just stopping punting on these larger projects. They are well positioned. The stock's been relatively flat this year heading into today's action, but interesting to see sort of how they've continued to mold their business on the pro side.
Yeah, I mean, it's just something where they're just good operators of the business. They're able to maintain margins pretty consistently. Their margins have weakened a little in the last couple of years, but again, that's kind of expected. I mean, housing has been, when we talk about housing, like housing construction has just been bad since early 23. It's been on a steady decline if you look at the data out there in terms of number of units under construction, which is what matters, right? Like, it's permits and starts ultimately feed into, hey, how many units are under construction and how much stuff do you need in order to build all this? After Q2 of 23, we were seeing about 1.7 million units under construction on an annualized basis in the U.S. It's at 1.372 right now. So you do the math, that's a 20% drop in construction activity over the last 2 years. And Home Depot's been able to respond by saying, okay, like, yeah, we had like some bad comps a couple of years ago, but our margins are still, 13.5% instead of 15%, and we're figuring out, where to grow, and like they're just good operators. And I give them a lot of credit for that, because it's not an easy time to be selling lumber and selling sinks and selling lighting. I mean, it's just kind of gross out there in terms of new construction activity. And so given that, I think the one thing that you can continue to say, I said, again, I'm a broken record on this, they're a really good operator of their business. And if there's one thing we have seen, people are willing to pay up now for good operators of otherwise boring businesses. Look no further than Walmart as an example of that.
Sure. The other thing I would note here is in terms of tariff impact, there really wasn't any in terms of the data from this quarter, just for folks out there who may be, asking, are they seeing price increases? And the short answer is no. All of the items that they sold over the course of this quarter that they just reported were imported prior to tariffs being in place. They source about 50% of their items in the U.S. Home Depot. And the CFO had mentioned that they are going to do their best to hold line and don't really anticipate major price increases. Again, that can change, but muted impact and really nothing to report on any tariff front there.
Along these lines, we get a piece from MarketWatch talking about the NAHB data that came out yesterday. Home builders boost sales incentives to 5-year high as they struggle to sell newly built homes. This is a real thing when we look at inventories that are sitting out there of newly finished homes. You're at the highest level since 2009, which is not the kind of comparison that you want to be making when it comes to anything related to housing.
No question about it. We've talked about it before. The percentage of builders offering incentives has now increased to 66% in the month of August. That was 62% the prior month. So, like you mentioned, a 5-year high, that percentage figure that I just quoted here. The confidence index has dropped too from where it was last year on the building front. And you think of the pockets of the country, Chuck, that would have the most building activity, and we've talked about it on the program before, Florida, areas of the Sun Belt, there just isn't a tremendous amount of demand to build there. The housing markets are in really difficult shape, so you just don't have a tremendous amount of eagerness for those home builders to get out there and build in what is a very tepid real estate market from the demand side of things.
And in terms of those inventories that are out there, so recently completed, constructions, right now you've got 119,000 units available nationwide. This is according to data from the Census Bureau. If you look back through the 2010s, just as an example, and things were still normalizing as of 2011 and 12 from the housing bubble, but you were down in 2013 and 14, you were down at like 40 to 50,000 units available. By the end of the 2010s, you moved up to around 60 to 75, 80,000 units available nationwide. So you're running right now at almost 120,000, anywhere from like a 50% to 100% increase from late 2010s inventory. And the last time that we saw housing inventory this high for completed homes was August of 2009, which is not really a good comp. Again, like you do not want to be there. The peak that we saw, just so that you can understand the context of, hey, at peak housing bubble, what did things look like? September 2007, we had 194,000 units, brand new ones, finished but unsold. Still sitting out there, completed but unsold. And so the reason why you are hearing about builders cutting back on their plans right now for construction, they don't want to get back to 194,000 units of unsold inventory again.
Right.
It's kind of bad for business. It's not good for them. And look, it's not even just that like you haven't sold these and made the money yet. You got to pay for landscapers to come in and mow the lawn so that people will visit. You've got to pay in the Northeast for, plowing the driveway so people can visit in the winter and stuff like that. You got to have all the upkeep, but you don't get any money from it until you actually sell it. That's a huge drag on home builders as well. So we'll have to see where this number goes. There are some signs in the last few months that maybe we're finding a little bit of a plateau here in that 110 to 120,000 unit range. Again, it more just speaks to the fact that builders are pulling back as opposed to any surge in buying activity. But we'll see where this goes, because that's going to be the driver of how home builders move in the second half of this year and into next year is, look, what's my unsold inventory look like? Because I'm not sticking more shovels in the ground if I can't move these units. Let's take a quick break here. When we return, we're talking Intel right after this.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Paul, piece from Bloomberg late yesterday, giving us some additional information on the United States potentially becoming a shareholder in Intel. What did we learn?
It seems that there is a potential, again, this is all just rumor, there's been nothing official yet, that they could utilize some of the CHIPS Act money that was granted to Intel and convert them into an equity stake within the company. Intel had been allocated $10.9 billion in grants for commercial and military production of chips. The government is really focused on making sure that there is a domestic alternative for chip manufacturing. It's dominated largely by Taiwan Semiconductor and Samsung over in Asia, and they're looking for a United States solution. So these grants are supposed to be given out over different tranches based on different benchmarks being hit in terms of Intel building out its manufacturing capabilities. So this would be something that would progress over time. In terms of my feeling, a little torn, Chuck. Just I don't really love government intervention in business in general, more of a laissez-faire approach personally. But obviously I recognize the need for domestic manufacturing of chips. Intel, as backing them as potentially the right bet. Historically, they obviously were dominant in the 80s and 90s and really were just the pinnacle of manufacturing, but they've really just screw the pooch big time over the course of the last couple decades. They completely missed mobile, and they also have missed this AI wave as well. So mixed thoughts on this proposal here, and this also piggybacks off of SoftBank also announcing that they will be investing $2 billion in Intel as well.
So, rule number one, never follow SoftBank into anything.
I wanted to get into them a little bit, too.
Like, full stop. Like, Masayoshi Son has a track record over the last decade or so of generally being kind of late to the party and backing the wrong horse. Granted, it's not to say that he hasn't had, great investments historically. SoftBank has had, a few major winners, largely from the early 2010s. But recently, we're talking about companies like, WeWork and things like that, we didn't work. And, okay, you move on, you take the L, and you call it a day. When we talk about the federal government taking a stake in a major American publicly traded company, let's talk about the potential, problems that entails. Number one, you've got a company that is now, part owned by the federal government. As such, are we going to then be more or less likely to try to funnel more money to that company because of, already existing, because that relationship already exists, regardless of whether or not the product coming out is actually good?
Mm-hmm.
Probably, right? It's not really great. Number two, okay, you have to assume, is it fair to say that if the U.S. government wants to be a shareholder in Intel, they're probably not going to just be a passive shareholder that lets Intel do whatever it wants?
Absolutely not. They're going to make sure this manufacturing gets done.
They're going to want board seats.
Water. Yeah.
They're going to want board seats and
Right.
stuff like that so they can exercise some level of control. Mike, do politicians have any political persuasion or any geographical and any polity? Do politicians in general like to preside over job losses?
No.
What do companies often need to do in order to get more competitive in the landscape? They often need to lay people off. Are you going to have, someone on the board saying, no, don't lay people off because it's going to look bad for us? Okay.
Yep.
Furthermore, regardless of what you think about this administration, good, bad, everything in between, if the next administration comes in and they are not someone who likes or believes in Intel, are you now putting the future of this company in the hands of someone who, just because maybe there's a bad relationship there, this and that, decides, hey, guess what, we're pulling the plug, and you undo maybe something good that actually comes from this?
Sure.
These are things where when you get into state-owned enterprises, even on a minority level, it becomes kind of problematic. I am much more in favor of, hey, if you have something where you see, a critical need for products X, Y, and Z, great, let's find a way, even if it doesn't make economic sense, let's find a way to produce that stuff here through, ways that we can incentivize production. Look at the MP Materials deal, just as an example. I'm going to keep coming back to this one because I actually think it makes a good deal of sense. If you look at the key tenets of that deal, from earlier this summer, the big things were, okay, here's a bunch of money in order to produce these rare earth materials.
Mm-hmm.
We are going to guarantee purchases at a certain level at a certain price. And we are going to basically pay for that. We're also going to provide some financing, but it's going to be on the debt side, not the equity side. And we'll talk a little bit more about this when we come back, along with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled Leaving a Lasting Legacy. Mike, when it comes to naming beneficiaries on different accounts, what's the thought process that people should be starting with?
Well, first and foremost would be probably you want to do it. I know that seems so basic, but Chuck, I mean, how frequently do we run into this where forget about your investment accounts. Usually those are getting looked at. Your 401k, it's one of the first things you get asked. But I run into people every day that don't realize they can have beneficiary designations on bank accounts, for instance. And what an easy way to avoid frustration after you're gone.
Can you talk a little bit about how much time and effort that can save someone after a loved one passes away when it comes to being able to inherit assets quickly?
Anyone that's been through probate will know the answer to this, but these things can last a year, and it doesn't matter if it's a $5 million estate. Obviously, that's pretty complicated, but A $10,000 checking account could also need to go through probate, and it could take an equal amount of time depending on the complexities involved. And so there are a lot of benefits that are out there when it comes to just utilizing the tools that are made available to you, and beneficiaries is a big one.
Folks, the guide is titled Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001. Again, the guide is titled Leaving a Lasting Legacy. It discusses beneficiary designations and a whole lot more. And the way to request it again is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory as investors react to the first wave of major retailer earnings from Home Depot unveiled this morning with mixed results. Right now, the Dow is up by 0.6% or 273 points. S&P 500 is now completely flat. NASDAQ is off by 0.6% or down 141 points. Russell 2000 is up by 0.1%. 10-year Treasury yield is down 2 basis points at 4.31%. And crude oil off nearly 1% lower, trading at $62.84 a barrel. Home Depot reported disappointing second quarter results where the home improvement retailer said that consumers were still delaying big ticket projects and that it would make modest price increases. However, Home Depot backed its annual outlook, sending shares up by 4% at the moment. Meanwhile, Intel shares are rising over 8% after Japan's SoftBank agreed to invest $2 billion in the struggling chip maker. This comes after news that the U.S. government has been considering taking a stake in Intel. Elsewhere, Palo Alto Networks reported quarterly results that beat street forecasts and offered full-year guidance that was stronger than expected. Shares in the cybersecurity company are up nearly 5%. Medtronic down by 4% following news that the medical device maker is adding directors after Elliott Investment Management became a major shareholder. Medtronic also reported strong quarterly results and hiked its annual outlook, citing lower than expected tariff costs. Shares of Viking Therapeutics tumbling 40% after the company released mid-stage trial data on its obesity pill that disappointed, and TV station operator Nexstar Media agreed to buy its rival Tegna for $6.2 billion. The Wall Street Journal previously reported that Sinclair was also seeking a merger with Tegna. Shares in Tegna and Nexstar are up over 4%, while Sinclair stock is flat. I'm Tucker Silva, and that is Wall Street Watch.
Paul, a couple other things that I want to touch on just with Intel and the possibility of the U.S. government taking a stake there. With the MP Materials deal, one of the things is, look, we've seen in the last year, not even last year, last 6 months, the importance of being able to produce rare earth materials domestically, correct?
Correct.
With Intel, is there any information specifically that we need to have Intel chips produced here domestically?
Just the looming threat of potential Chinese invasion of Taiwan, but not today. I agree.
Maybe I didn't make the question clear. Is there any reason why we need Intel chips specifically?
Oh, Intel, no.
If you look at it, just as an example, Taiwan Semiconductor, they got a big old factory they're building down in Arizona. Samsung's doing one in Texas. They might be doing one in Arizona too. I can't remember. LG is doing the same thing. Why Intel, I guess, is my question. And what I mean by this is I too believe that we need to have semiconductors produced here domestically. Why are we taking a stake in Intel when they're not really proven as a good operator?
Definitely not.
In this space right now? Like, if you wanted to produce semiconductors domestically, hey, Taiwan Semi, come to us, we're going to invest X dollars in this. I'm not even saying I like the deal structure, but just like bear with me. I want you to set up, a joint venture in the U.S. They might even already have one for just how they're structuring their U.S. operations. Set up a joint venture in the U.S. We're going to own 10% of it, and we want you to, do the build out and do your stuff there. If Intel doesn't make the chips that are cost competitive, competitive in terms of performance, and they're struggling to get their quality to where they need it to be, why do we just want to throw more money at them at this point, in this format too? Because remember, as an equity holder, if the company does badly, you do badly.
Right.
And I saw, Commerce Secretary Lutnick today say, well, look, this is a chance for the U.S. to participate in the upside. Well, if the U.S. wants to theoretically participate in the upside, again, this is before I even get to, being cool with just, state-owned semiconductor companies and things like that. Why are you picking Intel and not anyone else who's doing this right now?
They're the only U.S. option, really, is probably the short answer to that. Not to say I agree with that. And
I mean, they're not, though.
Who, on the manufacturing side, who would be the next pick?
Well, for you're talking like for fabs and stuff?
Yes. That's what they care about.
Then, okay, I guess, let's take this a step further then. If you really want to have a state-owned chip maker, why not make a state-owned chip maker?
Well, that's going to take even longer than Intel. Intel's probably going to take a decade to figure it out, but it's going to take even longer to start.
Which is why this is kind of a bad idea, right?
No, I'm not here to say the idea is a great idea, but that I'm just telling you the logic behind the decision. I would agree with you. We have to research probably Taiwan Semiconductor. That agreement. There's no way there isn't some deal in place or some partnership there for Taiwan Semiconductor to build that fab in Arizona. I feel like there has to be some sort of U.S. government commitment to that. But I'll take a look at that. But ultimately, that's why the impetus for this decision. And based on their checkered history, I don't know. It's not necessarily the right horse to back. I don't agree with that at all because they really have struggled, like I said, over the last 15 years or so, whether it's mobile, anything on the AI front, and the sophistication that's required to do this manufacturing. It's a very high bar to clear, and it's really capital intensive. And to your point, as an equity stakeholder, that would potentially require more capital commitment down the road, or Intel's going to have to raise more debt to do this. It's a long road for sure.
This also gets at the problem of you mentioned, hey, Intel's like the only game in town. Right? You said something along those lines in terms of the fab, like that kind of...
Because so many of the U.S. companies are more design-driven on the chip side of things, they're probably the best bet on the manufacturing side.
So I guess where I'm going with this is, I was also looking just at Intel's history of acquisitions over, the last 20, 30 years. And... a lot of the stuff is, kind of random things here and there. There's a few things. But they've also bought, some semiconductor manufacturers over the last 15, 20 years as well. It's not just, they've bought companies that, do, machine learning and cloud computing and this and that. And that's what it is. But in terms of, actual, semiconductor capacity and things like that, back in 2015, just as an example, Altera was a semiconductor manufacturer. They were founded back in, I want to say, early mid-'80s, like most of them, out in California. And Intel was allowed to buy them back in 2015 for around $16.7 billion. And you say, okay, isn't part of the problem that we don't really have many companies that do this because there's been so much consolidation allowed in this space that you have to back the bad horse instead of having other ones that are out there that you can potentially rely on?
Yes, that's definitely part of it, and it's such a capital intensive business too that it's hard to build up. Not impossible, but it's challenging.
So I don't know. I look at this and I just get a little bit nervous about it because I've seen this before where when you start getting into companies that historically are owned by the government with which they reside in. It can create some perverse incentives where things don't necessarily go great in the future, and so I have questions about it. I wonder about it, I guess.
Sure.
Let's see. Let's take a quick break now. And when we return, let's take a look at what we're seeing in the economic data as a whole. There's a good piece from the New York Times talking about this. And so let's touch on that when we return.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Piece of the New York Times that a lot of times I'll call out, a headline or a piece for being just, sensationalist or not really meaning anything or you can't do anything with this. In this case, I actually feel the opposite. And so I like to point out, good things that I see that are out there as well. Piece here in the New York Times. Economic data has taken a dark turn. That doesn't necessarily mean a crash is near. And the subheader is inflation is up and job creation is down, but the U.S. economy could still pull through without too much pain. And this is something we've been saying on our show for quite a while now, which is, look, just because you have things slowing down here for a quarter or two doesn't mean that you inherently go into recession. We've seen this in the last 2 years where heading into the fall, each time we had questions about job growth and inflation, and each time they were answered positively. Yes, we can get through this. The U.S. economy is strong enough and it's going to be able to deal with this. And it's not to say that will or won't be the case this time, but much more, hey, the U.S. economy is a pretty robust and dynamic thing. And even though there are some questions that are out there on the U.S. economy right now, it could still be answered successfully over the next couple months. And then as you get into next year, you've got a ton of potential business incentives from the big, beautiful bill that could spur, additional investment. And now you're off to the races again in 2026. This is absolutely something that is possible that we have to, keep on our board as a real potential possibility for 2026.
So many pundits out there are always in the business of trying to make a dramatic call one way or another, Chuck, that the economy is going to boom or the economy is going to bust. Bear
We're
bull,
so back. It's so over. We're so back. It's so over.
Bear bull case, all these different terminologies that get thrown around. But sometimes, and it's not appealing, it doesn't get clicks, and it also doesn't get views on the video front. Sometimes you might just go through a little bit of malaise, and that's possible here, and it's something that when you covered so much of this stuff earlier when the tariffs were announced, it just was always one way or another. People viewed it in two different directions. Either this is going to fall apart and be disaster, or this is going to be lucrative. And the answer could be somewhere in the middle, which isn't sexy to say, but we could get through this, muddle through it just fine, and like you said, in 2026, turn the corner.
So I just think it's important to keep, the potential for upside on your dartboard as something that we could see here. I mean, I'm not necessarily talking like upside in markets. Like, you could also have something where, hey, the U.S. economy catches up and markets stall for a little bit in order to get things more aligned there. Like, that's very possible too. So I think it's always just useful to remember. I think back at the last 4 or 5 years and just, Paul, like, how many things were like certain to throw us into recession during that time, and how many things then were, oh well, the U.S. economy is going to boom because of this, and oftentimes the truth is somewhere in the middle, and I think it's just important for people to remember that.
No question. Inflation that we saw in 2022, it's still damaging, but we got through that remarkably without a substantial recession.
Folks, if you are sitting there right now and you're saying, hey, you know what? This is all well and good, but I'm getting up there in age, and I want to make sure that I'm leaving things better for that next generation. The Armstrong Advisory Group does have a guide on this exact topic this exact month. It's titled Leaving a Lasting Legacy. What types of items are discussed in here? Making sure that your estate plan is aligned with your financial plan. How do you make sure that you're minimizing taxes to maximize what you're passing through to that next generation? How do you make sure that you're minimizing taxes on a multi-generational basis, not just you, but minimizing taxes for the people that inherit your assets? These are some of the topics discussed in this guide. How do you request it? 2 different ways. Number 1, you can call 800-393-4001. Number 2, you go to armstrongadvisory.com. Click the button to request your guide, and then you can request it right there. That phone number again is 800-393-4001, or go to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece from the Wall Street Journal. S&P Global Ratings has affirmed the credit ratings of the United States. This with them saying they expect, quote, robust revenues from the Trump administration's newly instituted tariff regime to help offset the fiscal deterioration resulting from recent legislative changes. So basically saying, hey, the big beautiful bill provides for a bunch more spending, and so it's not really doing anything to rein in deficits, but you got this tariff revenue coming in, and so long as that continues, things aren't really worsening. You're just kind of treading water.
Yeah, there wasn't huge meaningful takeaways that I had from this ratings reaffirmation here. I don't know if they get paid by the word, but they really throw around a lot of different words in their statement here, Chuck. They really are trying to get that word count up and use as sophisticated verbiage as possible, it seemed like here.
What businesses do you think would be worse to be paid by the word in? For the employer or for the employee?
Those investment prospectuses that
yes,
often can get in the hundreds of pages. Anything in the legal realm has got to be in there too.
Can we talk about investment prospectuses for a bit?
Sure.
Just while you brought it up, and I think it's a great topic. It's one that I've actually seen written about, which is basically like disclosure fatigue.
Yep.
And it's not just on investment prospectuses. It's on, oh, you signed up for DoorDash. Here are terms and conditions. Click here to agree.
Right.
And has anyone actually read them aside from the guy? I forget what the company was, but some company buried something in theirs where it was like, if you're the first person to read this and reach out to us, you collect like $10,000 from us or something like that.
That's fantastic.
And it took like 5 or 6 years for someone to actually do it, just because no one reads the terms and conditions. It's just, you get disclosed so much by the lawyers that you're just like, I don't know what this means. I'm just going to click it, and next thing you know, McDonald's owns your front lawn.
I mean, think about when you do your P&S to buy a house. That's a good example of one that just pages go on forever and ever, and it's just sign. They really should have summaries, and it's in our industry there is a case of that where there's summaries that are provided that just hit on the key points. And I feel like this statement here by the S&P on the reaffirmation rating could have been much shorter or much more concise than it was. But hey.
It is
what
it
is.
The
same thing, yeah.
Let's see. Private equity firm stocks are struggling despite getting into 401ks.
Misleading headline.
Yes and no. I wonder, is the reason that they're trying to get into 401ks because they're struggling a bunch?
They're always going to be looking for new capital. That's definitely part of it. The reason I would say misleading headline is, yes, President Trump put that into that notice or whatever exactly it was termed as, but it's going to take several years for them to get on platforms and to get approval. There's a lot that goes into the regulatory background for 401ks and what they put on their platform. They have to act as fiduciaries, so this isn't an immediate revenue stream that kicks on tomorrow.
No, it's a great point. Like, this stuff does not just happen overnight. Even if the platform may approve it, the fiduciary overseeing the plan may still say, I need a little bit more time to look at these before I allow these investments actually into my particular plan. Let's take a quick break here. When we come back, whole nother hour of stuff on the financial exchange. Back in a bit.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs, and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you, and we got equity markets mixed today. The Dow Jones Industrial Average is up 111 points right now. The S&P, though, is down 21, about 1/3%, and it's being dragged by tech with the NASDAQ currently off 1.09% or about 238 points. What's really lagging on the day? It's a lot of the stuff that has been fun for the last 6 months or so. CoreWeave down another 7% today. Palantir down 6% today. AMD down 3%. Netflix down 3%. NVIDIA down 2%. Meta down 2%. Microsoft and Google and Amazon all down 1.5%. So, again, kind of your big tech stocks down today. And the interesting thing is, despite the S&P being down 1/3%, you actually have 284 more stocks up than down in the index today. And so the S&P 500 on an equal weighted basis instead of market cap weighted is actually up almost 2/3%. So, again, kind of one of these things where, hey, you can complain about the big boys being down or being up and missing out on them. But if the big boys turn down, even if everything else is moving up, it's kind of hard for the index to hold up there. So that's a bit of what we're seeing in equities today. On the bond side of things, 10-year Treasury down 3 basis points to 4.31%. With oil right now, West Texas Intermediate is down 71 cents a barrel to 62.71. Gold is down 9.70 an ounce to 33.68 and 30 cents. And that is what we have moving markets today. From Business Insider this morning, Paul, the under-the-radar number that's a huge red flag for America's job market. Is it Daniel Jones' passer rating with the Indianapolis Colts?
That is concerning for Danny Dimes. But no, Chuck, what it is all about labor supply. So the concern that's outlined in this piece is that just like in your regular economics course or, concept that you hear thrown often is supply and demand. You need to have enough supply to meet the demand in place. What this article goes to describe is the importance of having enough people participating in the labor market to satisfy the demand for businesses out there. And what it goes to say is that typically there was the number of people entering the labor market exceeded those people who were leaving it since 2007. But more recently, what they've seen on a trend basis is that more people have been leaving rather than entering. And it's something that certainly the population decline is an idea that we've talked about from our longer-term trend perspective. I'm not so sure I share the same concern that's outlined in this article on labor supply that I think it's worth worrying about necessarily, just because I do feel like from a technological perspective, there could be a lot of advancements that we could see that could help minimize perhaps some of that labor supply deficit. Or you can always have the ebb and flow and change of immigration policies. What's cited in this article here is perhaps a further crackdown on immigration. It would be relatively easy to change policy to get more workers into the system, too. That's another factor.
So this is a really interesting topic to dig in on, in my opinion. And I have a few different thoughts on this. So let's start. I saw an interesting theory put out this morning, which is... It's on this exact topic, so this is just great that this is kind of the big one that we're talking about here. Back in 2022, Tucker, can you fire up the time machine for a minute for me?
Stand by.
All right, we're getting it all queued up. So, it's the summer of 2022.
Things are really expensive.
It's really hot. Prices are going up 9% a year. The dog that cost you, was there dog inflation?
There was a lot of demand for pets post-COVID, so we'll roll with it.
It's hot. It's the middle of the summer in 2022. Even the hot dogs, you don't even need a griddle to cook them on. You're just cooking them on the street. And the price of the hot dogs is tripled because that's what it feels like to us. And then inflation starts, kind of going down on an annual basis. It's not that it goes away, but we don't see 9% inflation, continuing. And one of the theories that I've seen posited on this is, look, you had this huge surge in immigration, which I'm not asking, anyone to, think of immigration as good, bad, or whatever. I'm just saying we had this big surge in immigration, some of it legal, some of it illegal. And what it resulted in, one of the things, was a bunch of people coming into the country and into the labor force. And so the theory that I saw basically says, look, one of the reasons why we avoided what's called this wage price spiral, which is, hey, as prices go up, labor demands more in order to, pay for those things, and that drives prices up more because companies maintain margins and yada yada. One of the reasons we avoided this wage price spiral is because of that huge surge in immigration, which subsequently, particularly this year, has abated, and in some cases, there's questions whether it's even reversed. And so the question that is out there now that I think is looming is, look, Paul mentioned, there's a bunch of new technology that might end up, being able to help us be more productive in the future. Is it fair to say, Paul, that we think that a lot of that's not quite ready for prime time right now?
That's fair. Over the next 6 to 12 months, no.
Yeah. And so the question that I see out there now is, okay, there still is work that needs to be done now, but there are fewer people. We have this inflationary impulse that, in theory, can be a one-time change in the price level because of tariffs, But if the labor supply is diminished relative to where it was previously, does this end up kind of spooling that inflation up and making it not such a one-time thing? And maybe the evidence that we're seeing of this is that services inflation is starting to pick up in multiple data sets now. And so the lack of available labor could actually act as a force to maintain inflation going forward here. Your thoughts, Paul?
The services piece is something that that could make sense. That could play out that way. We certainly saw it back in 2022 when we hopped in the time machine. There was a tremendous amount of demand for labor in the services and leisure sector of things because so much job loss was incurred over 2020 and 2021 during the COVID era. And you did see just a tremendous demand for workers and all sorts of issues that restaurants and other hospitality businesses ran into here. I just find that it's a bit of a far jump to just sort of have all these things perhaps work in sync. I'm not going to spell the probability of it not occurring at all, but I just wonder if you could have all of those things align at once. To me, it just seems a little bit far-fetched that would be the case to occur.
I think the big thing that we are seeing is a labor market that is different from one that at least I've seen at any point in my lifetime. You know, at least since I knew what labor markets were. I mean, maybe when I was 3, something like this was going on, but I don't know. So I think you have this really interesting situation now. And again, it gets at the question of, like, what should the Fed do? Because let's say the job growth is slowing, but let's say it's also slowing because the labor market is not growing at the rate that it was previously. The Fed doesn't have a jobs per month target. The Fed has an unemployment rate target. And the reason why, like, if you think through this, let's say that you live in a country with a population of 100 people, and 4 of them are unemployed. If one person leaves the country, and let's say that you fill one more job, let's say that one person leaves the country. So now you've got 99 people in the country, one of the unemployed people left, and let's say that you lose one job on a net basis. So now there's 95 people out of 99 that are employed. You lost one net job on a net basis. Should the central bank of that country be cutting?
No.
I mean, again, like, this is a fictional country with 100 people. It probably doesn't have a central bank, but, like,
they're working on it.
You get the general premise of this. So, like, when you have a population that isn't moving, you're not concerned in the same way about, hey, what's the total number of jobs being added? Because you could have very few jobs added, but unemployment is stable and low still. As opposed to, hey, if you got 100 people, but now you've got 110, and the unemployment rate, no new jobs are added, now the unemployment rate's 15%, the Fed might say, okay, we got to cut rates because we got all these unemployed people running around, and that's generally not good for anyone. So the rate of population growth does matter, and it can distort all of these things. And part of me is wondering, look, is this just a different environment between the shift in immigration that we've seen this year? You still have, a bunch of baby boomers that are retiring, and there aren't enough Gen Zers to replace all of them. Is there a case in the short term for more labor demand than supply, even though that labor demand is relatively tepid? Maybe is kind of the answer. It's just kind of a wild thing to think about because we've never seen an economy and a labor market quite like this. Let's take a quick break here. When we return, Sarah Foster from Bankrate is going to kind of continue this conversation, sort of in a little bit, but it's different. It's tangential, but I think some really interesting stuff talking about wage growth versus inflation. Bankrate did a bunch of studies on this, and she's going to share what they learned with us right after this.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Cushing and Dolan know that no two families are alike, and neither are their estate plans. If you want a stress-free retirement, early planning is key. And for many, trusts are the tool of choice to protect assets and minimize taxes. But here's the challenge. There are dozens of trusts out there, revocable, irrevocable, and each comes with different rules and tax implications. From family trusts to special needs trusts, creditor protection trust to charitable trusts, each serves a different purpose. Knowing which one fits your situation can make all the difference in your plan. That's why Cushing and Dolan put together a brand new guide demystifying the top 7 estate planning trusts. It breaks down the most common trust options so you can decide what's right for your family and your future. Call 866-848-5699 right now and ask for your free copy or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
As promised, we're now joined by Sarah Foster from Bankrate, here to talk about their 2025 Wage to Inflation Index survey. Sarah, thanks for joining us today. How are you?
Thanks for having me. It's great to be here. Always enjoy it.
Fantastic. Tell us a little bit about what this survey studied and what you found from it.
Yeah, so it's a really complicated question that I think a lot of people have been wondering. Have your wages kept pace with post-pandemic inflation? We wanted to look into that, and the best way to do it was indexing inflation and wage growth to the beginning of 2021, because that's when the economy reopened and that's when inflation first took off. And what we found is that actually Americans' wages are still in the hole. That gap is closing, but it signifies that Americans have less purchasing power today than they did a few years ago.
In terms of how this is being felt, are there any demographic breakdowns or industry breakdowns that show this is happening the same way to everyone, or are different groups feeling it differently?
Yeah, so there are actually some industries where workers' wages did keep pace and actually beat inflation. Those were retail, food services, leisure and hospitality, and then healthcare. I think it's wage growth is always kind of this reflection of how much bargaining power workers have. And if companies are looking for workers and workers have lots of options, that's when they're able to negotiate and get bigger pay raises, and when companies are more likely to lift pay to lure talent. That's exactly what happened for those service sectors coming out of the pandemic, when jobs came back much faster than the workers did. And healthcare especially, that's been driving most of the job growth over the past 12 months. So that's probably why you've seen that be such a better kind of wage growth story for these workers.
What's the situation look like now? I've heard today's labor market, referred to as, being more sluggish, kind of this, slow hire, no fire, situation that's going on. What is that doing to wage growth relative to inflation, or do we just not have enough data on it for this year yet?
Yeah, you're right. This job market, many economists and workers themselves who are stuck in it describe it as just frozen in place. It's really hard for entry-level people to find better jobs. It's really hard for people who are still employed to move up the ladder. It results in everybody just getting kind of stuck in place. And so that's why you've seen actually wage growth slow, and slow even more than prices have over the past couple of months. Something that we really like to do is kind of project out when the gap between inflation and wages will close. And that has been taking longer year after year as inflation stays stubborn. And now as the labor market, slows, it's also impacting how quickly Americans recover from inflation.
What kinds of things are people doing in order to try to still find ways to grow their wages during a more challenging labor market like this one?
Yeah, well, we do know from surveys that many workers, about half of them, plan to look for a new job in the next 12 months. And we also find that many workers are also interested in negotiating for a raise, asking their employer for more money. I think, from an economist perspective, when I'm asked, how do I get a raise in 2025, I often say that because it's so much harder to find a new job elsewhere, it probably is easier for you to at least get a pay increase if you're still employed with your current employer. Something I always like to say is that top performers are always rewarded, and the ones who remained agile, the ones who are always trying to get better at their jobs and prove their value, they're the ones who will be rewarded even in tougher job markets.
Fantastic. Sarah, thank you so much for the time today. We really appreciate it, and thanks for all the information that you were able to share with us.
Thanks for having me. It's always great to be on here.
That is Sarah Foster from Bankrate talking about wages and inflation.
All right, time for trivia here on the Financial Exchange, and our run of World War II trivia continues today with a look at some of the leaders during the war. Trivia question for today was, who is the Prime Minister of Great Britain during World War II? Once again, who is the Prime Minister of Great Britain during World War II? Be the ninth person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, the ninth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, I want to talk a little bit about restaurants. We got a couple pieces here, one from Bloomberg about Chipotle and Shake Shack, another one from the Wall Street Journal about casual dining restaurants. Think Cheesecake Factory, Chili's, Olive Garden, more sit-down style. And I think that when we look at what we're seeing here, there are definitely some things that you can tell from how Americans' restaurant tastes are changing. What does this piece or these pieces, what do they tell us here?
There seems to be a lot of focus, Chuck, on value. You know, the reason why Chili's has been successful in this environment is their development of the 3 for Me value deals starting at $10.99. It's not necessarily the cheapest out there, but the value that they're providing with that, the CEO has stated, has really worked well with consumers, and it's really supercharged kind of their marketing efforts. And I think you compare that to an area like Chipotle, which is pretty pricey when you check out for their ultimate burrito bowl, whatever you're looking at, closing in probably closer at $15 or so, and you're just not getting the same value. And it seems like that is really the split that we're seeing there for consumers looking for value and sort of beat some of the pricing pressure that they've seen post-inflation versus, those higher end ones struggling a little bit to keep up.
Yeah, it's kind of, you want me to pay that for this? No, I'm going to go and, I might have to pay $1 or $2 more, but I'm sitting down. Someone's going to refill my water. Like that seems to be something that makes sense just intuitively, I guess, when you look at how all of this pricing is compared. Let's take a quick break here. When we come back, we got the trivia answer and we got Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Leaving a Lasting Legacy. Mike, one of the things that people have to navigate now is figuring out which accounts to leave to different beneficiaries. As an example, if someone has two children, one in a high tax bracket, one in a low tax bracket, how does that potentially impact who receives which assets?
Well, let's call it out. First and foremost, most commonly, people just divide equally. And there's nothing wrong with that. I get the fairness argument with all of this. But taking your example here, let's imagine we have one person with an average effective tax rate of 10% and another one with 25%. Obviously, there's going to be a massive difference in terms of what is left over with a traditional IRA, for example, for that person in the 25% bracket versus the 10%. And so with the new rules over the last few years when it comes to requiring those accounts to be emptied over the course of 10 years in most cases, especially on the retirement account front, there's a lot of different stuff that can be looked at there. That doesn't even take into account things like non-retirement accounts, Chuck, right?
Sure.
So for those, you have a different set of rules that applies to those, generally pretty preferential tax treatment. And so you can be really intentional about how you leave the biggest legacy possible to your heirs as a whole.
Folks, the guide is titled Leaving a Lasting Legacy. The way to request it is by calling 800-393-4001. Again, the guide is called Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
NASDAQ selling off at the moment, the Dow and S&P 500 mixed as investors digest a first wave of major retailer earnings from Home Depot posted earlier this morning with mixed results. Right now, the Dow is off by 0.2% or 99 points higher. S&P 500 is down 0.25% or 15 points lower. NASDAQ down nearly 1% or 207 points lower. Russell 2000 is off by nearly 0.3%. 10-year Treasury yield down 2 basis points at 4.31%, and crude oil off 1% today, trading at $62.79 a barrel. Home Depot reported disappointing second quarter results, where the home improvement retailer said that consumers were still delaying big-ticket projects and that it would make modest price increases. However, Home Depot backed its annual outlook, sending shares up by 3%. Meanwhile, Intel shares up over 7% after Japan's SoftBank agreed to invest $2 billion in the struggling chip maker. This comes after news that the U.S. government has been considering taking a stake in Intel. Sticking with chips, where NVIDIA shares are off over 2% after the AI and chip giant said that it is evaluating several products following a report that the company is working on a new AI chip for China that is more powerful than the currently available H20 chip. Elsewhere, Palo Alto Networks reported quarterly results that beat street forecasts and offered full-year guidance that was stronger than expected. That stock is up by 4%. Shares of Viking Therapeutics down 40% after the company released mid-stage trial data on its obesity pill that disappointed investors. And Robinhood announced this morning that the online broker is launching prediction markets for professional and college football. It will be available to customers in the coming days. Robinhood shares are trading 3% lower at the moment. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: who is the Prime Minister of Great Britain during World War II? That's, of course, Winston Churchill. Glenn from Woods Hole is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Glenn. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Can having a prediction market, Chuck, does that just shorten out not being a gambling company if you create a prediction market? Is that like a way to work around it?
So
Crazy.
Here's this is actually a really interesting topic. So we're basically heading to something, Paul, it feels like, where whether you want to call it gambling or not, I think there are just so many, and this is just from talking with people like in their 20s, there are so many people in their 20s and you can even say like early 30s that have $250 that are just willing to take a flyer on anything for hope that it gets them somewhere economically right now, that you can basically just run that whole dopamine program for, oh, like, this is exciting even if it goes badly.
Yep.
And people are fine with it. I saw someone yesterday, and look, it's not my bag. Like, I don't get involved in any of this stuff. I don't understand it. But someone yesterday was talking about, you know, the fact that, look, in crypto, there's, like, all this scamming that goes on, right? And someone made the point, like, look, if you're, you know, upset about people in their 20s and 30s, you know, investing in crypto and getting scammed, you're missing kind of the point for them, which is ultimately they're trying to take a little amount of money and turn it into a large amount.
Sure.
And if they get scammed doing it, it's not really any different to them from you and I going to the casino and playing blackjack and getting a bad beat.
Right.
On a hand.
Right.
And when I thought about it that way, it's like, okay, like, yeah, I kind of get that. They're not talking about, you know, we're not talking about sophisticated investors who are, like, taking $1 million and thinking something's going to, you know, come out of it. It's, hey, here's $100 and hopefully it goes well, but otherwise I put it into fart coin and joke's on me for investing in fart coin.
I think that's a good way to phrase it. When I came out of college, I had a couple stocks that I bought that, you know, pharmaceutical hopes of FDA approval, you know, these long shot pipe dream ones, and you lose and you take a bath on them and you're not putting a big amount of money in it, but then you learn, gee, maybe I should look for a more durable and sustainable business and invest in that rather than taking this flyer. So it's interesting when you put it that way. We've all had those learning lessons, and maybe it just comes through a different form that I'm not accustomed to now, but I don't know regulatory-wise how you get prediction versus gambling, but I guess Robinhood's doing it, so here it goes.
It doesn't feel good. I completely agree. And I don't know where that line is because, again, like what makes a prediction different for, like, if I'm betting on Aaron Judge to hit 60 home runs, that's gambling. But if I'm betting on who the next Prime Minister of Norway is going to be, that's a prediction. What's the difference here?
Right.
You know? So, yeah, I kind of struggle with that too.
A trust isn't just a document, it's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and for your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex, so don't guess your way through it. Get the facts first by calling Cushing & Dolan at 866-848-5699 to request your free copy. That's 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Peace in Bloomberg. Big business came prepared for this White House. It talks about how earnings have grown meaningfully despite any questions about where the economy may be as a result of tariffs or anything else. Paul, what do you make of this piece and what we're seeing from companies trying to navigate this world right now?
It's important for us to point out that this earnings season has been quite strong relative to what Wall Street forecasted. As much as we will highlight potential economic concerns out there when we do the program, you also have to acknowledge that these earnings reports have been really great for the most part. We've seen a surge of about 10.5% on earnings from a year earlier. That was well above Wall Street's forecast of about a 2.8% gain, according to Bloomberg Intelligence, you've had a lot of contribution from the major players that we talk about a lot, the Metas, the Googles, the Microsofts, etc. But also there's been some earnings growth across some of the other major S&P 500 sectors. And the other piece that I want to hit on here, other than acknowledging that, hey, earnings have been better than anticipated, there was a lot of pessimism when tariffs were initially announced. They've been pared down significantly from where they came out, the initial rates, so that's part of it. And estimates were pulled back, and maybe that just makes an easier bar to clear. But the other piece I want to talk about is perhaps this divergence between big businesses of the S&P 500 that you and I talk about so frequently on this program versus kind of that middle market business. And I was listening to a podcast recently which just had mentioned that, just if you think about large retailers like Walmart and Target and others, they have a lot of strategic positioning and supply chain flexibility that smaller businesses don't have. And I just wonder if we are seeing that further split, that the big businesses that we follow so closely on the S&P 500 side of things are faring all right here, but you have other smaller to mid-sized businesses that may be struggling more, that we don't necessarily cover as much in the show. And if you look at the Russell 2000, which is that smaller cap side of things, it has not had anywhere near the robust earnings growth that we talked about with the S&P 500, only posing about a 3% earnings growth year over year. So it's just something that I've been looking for more and more evidence of it. And I haven't found the perfect statistic, but it's just a thought that has crossed my mind that maybe these mid-sized businesses are struggling when these large ones are being a little bit more successful than anticipated.
Let's take a quick break here. When we come back, we'll do a little bit of Stack Roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila. Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, Paul, what do you got for me for Stack Roulette?
I'm going to go totally off script, Chuck, but I know you can handle it. This is in regards to an old New York Times piece, old as a couple months ago, but the concept is still the same. Gen Z doesn't want to start a bar tab. To the chagrin of many bartenders, these 20-something-year-olds are not willing to start a bar tab. Now, the Gen Z has been accused of, or statistically found to not drink as much as their older counterparts, but they also feel there's some sort of entrapment by starting a bar tab. And the reason I brought up this piece is because, unfortunately, though I'm not in Gen Z, I fall guilty to this too. I have the worst time committing to start a bar tab, and I can't explain it, but I just share these fears with them where I'm unwilling to do it, and I always go one by one, and it probably ticks off bartenders quite a bit.
Tucker and I are here to help.
Okay. Where do you guys stand on this?
I'm very pro-tab.
Okay.
I believe even if you know you're only getting one drink, open a tab because you never know. You might want another.
Right.
You know, and again, I don't like going through the whole, I got to get my card out again and, this and that. Why do Gen Zers say they don't want to start a tab? They think it's entrapment?
Well,
do they know what that word means?
I just like to keep it fancy on the show here. But if you want to leave and the bar is packed and you got to find someone and you're trying to wave them down to close out your tab versus if you go one by one, and this is the reason why I've had an issue with it, I'm just out the door. I'm paid up and I can go versus trying to wave and flag someone down to close out.
I mean, that's what it comes down with me is like, how busy is the bar? Because if it's packed and I'm not convinced I'm staying for more than one drink, I'm closing it out because I don't want to sit there for 10 minutes waiting for the busy bar to die down so I can get the bartender's attention.
Okay, go ahead. No, sorry.
Two things would need to happen there. You need to flag someone down, and you need to say, I got to close out my tab. So they have to come over to you, and then also they have to go back and close out your tab.
Not to mention, it's hard to find some writing room, right, on the bar.
That's true.
If they don't give you the little pamphlet or the leather-bound book.
You got to work on that signature. Tucker, I spent my entire childhood thinking I was going to be a professional athlete. You know what that meant? Meant I practiced signing baseballs left and right.
Oh, sure, yeah.
And
we've all done it.
Nevertheless, my signature looks great on a baseball, but I've never been asked to sign one. It's very convenient when you're in a crowded bar and you have very little room to sign. You can make it work. I guess where I end up on this is, look, when I was 22, never did I go out just for one drink.
Right. So it wasn't a thing.
Now that I'm, 20 years older, I don't go out at the times where it gets crowded.
That too.
That's true.
It's 2:00 on a Saturday. Great. If it's 2 p.m., yeah, I'm there having my drinks because there's no one else there. If it's 2 a.m. on a Saturday, I've been in bed for 6 hours now.
That's true. That is
you
true.
know, so I don't deal with crowded bars. I look at a place where there's a line out the door. I'm like, oh, those poor people. Like, I wouldn't want to be you. But I guess people like going where other people are. I don't at this point. I'm like, no, find me the quiet bar that might go out of business tomorrow, and that's my jam at this point. I'm looking for that.
That makes sense.
I've got a good one here. So Chamath is back with a new SPAC because we're in SPAC world at this point.
Oh gosh.
And the disclosure that is available on this is fantastic, if I may say so myself. So this is from the actual filing for the SPAC. We will be attempting to find a great company at a great valuation. If you're not familiar with a SPAC, basically you put a bunch of money into this shell that then goes out. The shell's publicly traded, then goes out and finds a company to buy. That's the premise from it. It has fewer regulatory requirements and this and that, but you still have to file for the SPAC. So they're trying to raise $250 million to go and buy something. Quote, we'll be attempting to find a great company at a great valuation to take public, but without doubt, the investment will entail substantial risk, including the possibility of total loss. Okay, basically every equity says that. Fine. Unlike my private portfolios, which hold many companies and thereby provide diversification, the American Exceptionalism Acquisition Corporation will be an investment vehicle into a single operating company. Okay, fine. Like, again, pretty standard stuff here. Consequently, we believe that this investment is most suitable for institutional investors, and retail should approach this with caution, if at all. Well, if that's true, you probably wouldn't be setting up a SPAC, first of all. But This is where we get fun. We believe that retail investors should only participate if A, this investment is part of a small, otherwise diversified portfolio. B, this investment is a quantum of capital they can afford to completely lose. Quantum of capital. What defines a quantum of capital, Paul? Is that 3 Shroot bucks? is it 4 is it 4 penny loafers? Like what's a quantum of capital? And C, if they do lose their entire capital, they will embody the adage from President Trump that there can be, quote, no crying in the casino. I mean, this isn't like an actual regulatory document.
How many pages was this buried in, or is this right front and center? This isn't even the disclosure discussion from before. This was front and center?
Don't know. I don't have a page number on this, but I did confirm it is legit and in here. I don't have the page number.
Oh my goodness.
On this, but this is what we're getting in disclosures at this point. And look, Chamath, the big thing is back in when was it that he went through his whole "I'm the man in the arena trying things" phase? It was 21 or 22.
21 probably.
And a lot of the things he tried just didn't work, which, again, like, he's the man in the arena, great, but ultimately he's putting up your money, not his, so, like, how much is he really the man in the arena is the question, I think, right?
Yeah, we need to know his capital commitment to this
correct
potential quantum loss.
In any case, I found that to be funny. Yes, the loss of quantums is could be devastating.
Piece in here, when it comes to tipping, are we heading back down to 15%? What they've noticed from some data from Toast, which is a provider for a lot of restaurant payment systems out there, that they saw a decline in tipping at full-service restaurants to 19% on average. That was the lowest level that they've seen since they began tracking it 7 years ago. It peaked at its highest at 20% in 2021. For obvious reasons, of course, restaurants and staffing during the post-COVID era, it was a very challenging time. So some of the theories kicked around are people are tipping tired. And I will say that there is, not that I'm in agreement, full-service restaurants, I'm a standard 20% guy for the most part, unless you really are screwing things up. But there is something when you do go to those kiosks, and this is focusing on full-serve restaurants, so it's not when we bump into this at a coffee stop or something like that. But that does... We've talked about that before, and that does bother me when I'm at Fenway Park and you spend $20 for a beer and then they ask for a tip. No offense to those people working there, but it's like, come on, I just shelled out $20 for a beer. I really don't feel like tipping on top of this.
I want to talk about, I know we only have a couple of seconds left, but quiet cracking. Apparently this is when people feel overwhelmed at work and having lots of pressure to do more with less. I'm not sure that this is worthy of a new phrase because I think this is...
burnout.
Yes, like We don't need to reinvent the burnout is kind of where I'm going. We're done for the day. Back at it tomorrow. We'll see you then.